Hello, my name is Wangashi and welcome back to the channel. Today we're going on with the series about cake pricing, and today we're specifically going to be discussing accounting for overheads. Overheads are what's technically necessary to stay afloat in the business, but sometimes we do forget to account for them. Most of us probably only account for things like electricity and rent as our overheads, but there's more things that small things that you might not notice that you are not accounting for, and each month that you pay for these things, or each week or annually, you're very likely to spend chunks of money that you're not accounting for or even calculating their costs, and then each month that you do pay for them, or each week or each year, you end up running a loss, and you keep wondering how come I'm making 300 cakes a year, but then at the end of the year I still have no money left. How come I'm not making a profit? How come I'm not able to grow my business further? So our biggest reason for this happening is usually not being able to, or not considering a few factors in our overhead costs, and thus we end up probably just breaking even or going at a loss when you do when you pay for big bills at the end of the year. One basic example I can probably give is our monthly phone bill or your weekly, depending on how you pay for your phone airtime. Paying for your phone bill is extremely important because at the end of the day, you still need to be able to communicate with a client. So I still need airtime monthly. For me, I do the Safaricom postpay, which is a monthly bill, and I prefer to take the lowest option. I pay 1,000 bob per month, and I'm able to text, WhatsApp, call my clients. And if I do go over that, fine, it's okay. I can easily account for that at the end of the month. But then, if I never account for my phone, the amount I spend for airtime every single month, I still need to buy credit every single month. But then if I'm not accounting for credit, then where is the money coming from? So at the end of the year, if I'm paying 1,000 shillings per month for airtime, at the end of the year, I have spent 12,000 shillings, Kenya shillings, that I've never accounted for. And had I accounted for it in every single cake that I made, at the end of the year, I would still have spent that 12,000 shillings, but it's not coming from my pocket, because I'm pretty sure every single one of us has a goal in life. So if every year I'm losing 12,000 shillings that I never accounted for just to buy airtime, that money could have been put in my savings, could have gone to maybe charity. Something could have been used. If it didn't come out of my pocket, it could have been used for something different, which would have been great. So overheads are very, very important to keep your business afloat. Technically, they relate directly to the business, but not to each cake that you make. For example, every month you have to pay rent at your bakery, or if you're a home baker who's paying rent, you have to pay rent every single month. If your sole income is from your home bakery, you have to make money and pay the rent every single month. But if you do not make any sales that month, you still have to pay for your rent. So you have to account for overheads every single month so that you don't go at a loss. And also, when you account for your overheads, it's easy for you to know how much your quota, is it called a quota? Like your monthly quota, or how many cakes I'm supposed to sell, so that I can be able to pay for the overheads, do ABCD, and not incur any losses that I might be incurring without even realizing I'm incurring. So overheads can be classified into 3 segments, which is variable costs, fixed costs, and semi-variable. So I'm going to talk a little bit about each, and then now we can do our calculations. So for the first one, we have variable costs, and these are costs that change as the business is growing, or depending on how the business is doing month to month. For example, when the season is high, your sales are expected to be more, which means some of the costs that you incur to run the business change month to month depending on how much work you have each month. Small things that you might forget to account for also make up your variable costs. So if I can list an example of variable costs, we have electricity, water bill, vehicle service, delivery fees. For example, for delivery fee, we can say like boda guy. Like I send my rider once a month. So this month, maybe I have double the amount of work that I had last month. I might need, and I hadn't accounted for all that work. So I send him twice that month. I still have to pay him twice. So that's a variable cost. Your fuel, your greaseproof paper. So those are the some examples of variable costs that you need to account for each and every month, for each and every cake. So with such bills like electricity, water, fuel, maybe you fuel your car or you service your car once in every few months. So this is a cost that you will notice at the end, not with every cake that you make. So once you need to add those up to realize the cost for that. And then now with fixed costs, these are costs that barely change month to month. They're usually fixed. For example, your rent, it's an agreement that you agreed to at the beginning of your lease. So if my rent is 35,000 shillings a month, he's not going to charge me 35k this month because he's seeing me sell, and then next month because my landlord is saying there's no business. He's not going to reduce it from 35k to 10k. It's still going to remain 35k whether or not I'm making any money in my business. Another example would be your licenses. Kanjo City Council doesn't want to know whether there's biashara or no. You still have to pay your license fees. Another fixed cost would be insurance. And the example I gave, your phone bill, depreciation of your equipment, and another fixed cost is your salaries, whether it's your personal salary or the salary for your employees, if you have some, etc. So these are some of the examples for fixed costs. So you can take a look at your business and see what are some of the expenses. Maybe I can add Wi-Fi if you have Wi-Fi at your store or your house. So account for all these things, and those are going to be your fixed costs. And then the third one, your semi-variable costs. Semi-variable costs are those costs that are technically fixed, but they can change from month to month. For example, I said your phone bill is a fixed cost. For me, who pays 1,000 shillings a month for my phone bill, but if I do go above the 1,000 shillings on maybe my data or my minutes, I can always buy a few more, maybe credit worth 200 shillings to last me for the few days before the month ends. So that's going to be a semi-variable cost. So to calculate for our overhead costs, we're going to calculate a rough estimate for our overhead costs and then come now and add them all together. We're going to start with our variable costs, and remember, I'm just doing rough estimates, not as I'm assuming. I'm not even using my estimates. I'm just doing rough estimates so that we can come now at the end of the video of the series, we can come and see how much we do spend for each item and how much approximately you should sell your cake. So remember that the costs I give here are not set in stone. They might be higher for someone, they might be lower for another person. So you calculate with what you do spend, and then that way you can also comfortably come up with your own prices. So we have electricity, maybe we are paying at 3,500 shillings a month, a water bill of 500 shillings a month, delivery fee for the rider at 1,000 shillings per month, cleaning supplies at 1,500 shillings a month, marketing fee of 1,000 shillings a month, and maybe let's add greaseproof paper at 300 bob a month. And then we have our rent, our fixed costs, maybe a rent of 15k a month, a phone bill of 1,000 bob a month. Maybe we have someone who comes to clean once or twice a week and we give them 2,000 bob a week. So that comes to roughly 8,000 shillings a month. And then we have our license fees, which might be 50k, 40k per year. That's for fire, health, food, advertising, business, etc. Our licenses may become to 40k a year. So you divide that per month, you get 3,300 per month. Wow. So that's 33 per month. I'll put that 335. And then we have an insurance fee. Maybe we pay 5k. Our premium is 5k per year. It comes to 5k divided by 12 months. It comes to 416. So that's, we're going to put that at 420. And then our depreciation. Depreciation is, you calculate the buying price for the good and the amount you intend to sell it for, and then you divide that by the number of years you're going to use it for. So for example, if I buy an oven for 75,000 shillings and I want to sell it for 40,000 shillings, it's going to cost, that comes to 35,000 shillings. If I want to use this item for 5 years, that comes to 7,000 shillings. So 7,000 shillings, how much will it be per month? It comes to 583 shillings per month. So that's the amount it's going to cost you depreciation per month for the oven. So do that for the oven, for the fridge, for the microwave, for the stand mixer, hand mixer, your airbrush machine, every other equipment that you have that depreciates in value as you have it. So calculate that for each item. So I'm going to put a rough estimate of 1,000 shillings for each. So now let's add all these together. So we have our electricity at 3,500, our water at 500, our delivery at 1,000, our cleaning supplies at 1,500, our marketing at 1,000, our greaseproof at 300, our rent at 15,000, our phone bill at 1,000, our salary at 8,000, license fees at 3,335 shillings, insurance premium at 420 per month, and a depreciation value of 1,000 per month. So when you add all these together, now how many cakes do you expect to sell for each month? So remember how we said in accounting for labor, depending on how many cakes you're comfortable doing every single day or every single week without burning out, and you can comfortably execute each without fail, how many can you do per day, per week, per month? So assuming I'm only doing 1 kg simple buttercream cakes, just covered in buttercream, maybe the border and some fruits on top, how many cakes can I do per day? If I can manage to do 3 of those every single day, 6 days a week, if I can do 18 cakes a week, in a month it means I can roughly do 72 very simple cakes a month. So my expected overhead costs per cake comes to 507 shillings per cake. But still, remember, this is an estimation, this is an approximation. Nothing is set in stone. Does not mean this is how many cakes I can genuinely do in a month. Maybe someone is a superwoman here or a superman and they can do 100 cakes in a month, 100 of those very, very simple cakes in a month. So if they're doing 100 of them, obviously their expected overhead costs go lower. But then at the same time, the more cakes you're doing, the more your variable overhead costs go higher. Look at what is eating up your extra, because if I have to do 72 cakes for me to have a low overhead cost, if it's too much work for me, maybe I can only manage to do 30 cakes. Let's look at it like that. 507.83 is for me to do 72 cakes a month. So if you look at it this way, if I cannot manage to do 72 cakes a month, I can only manage to do 30 cakes a month. So I'll calculate my total expected overhead expenses. If we look at this amount and I can only manage to do 30 cakes a month, it means my overhead costs come to 1,218 shillings, 0.80 cents. That's approximately 1,220 shillings for overheads only per month. So when you do it like that, calculate and see, should I add more while maintaining the same expenses? Should I add more cakes to my business to reduce the amount for my overheads? Or maybe is there something I can cut down on to also reduce this? Like, for example, for cleaning products, maybe I'm using detergent to wash my aprons, the floor, etc. I can decide, since Omo is a bit more expensive, maybe I can buy some multi-purpose soap. So I won't need to buy a different soap for hands, a different soap for clothes, etc. So I've reduced my cost on that one aspect. So also remember, while doing this accounting for overheads, I haven't included things like your car cost. So if you do have a car, you also need to account for depreciation of the car. Also add variable cost for the fuel, for car service, etc. So those are some of the things that I didn't account for. But if you do have them in your business, don't forget to add them, because at the end of the day, at the end of the month, at the end of the year, they also add up to a cost. Don't cut costs that would end up hurting your business. For example, removing the cost of insurance to cut down on your overhead costs also means, if anything were to happen, God forbid, if there was a theft in your house, in your home, in your business, or whatever, God forbid, knocks on wood, if that were to happen, what ends up happening is you have to chuck the money yourself to go replace the item. But if you are paying your premiums, then you'd have some help somewhere. So once you look at those things that you can manage to cut down on, if you can, reduce them so that you can reduce your overhead costs. And then that also means, if my overhead costs are going lower, it means even if I maintain the same price for the cake and my overheads has gone from 570 to now 300 bob, it means now my profit margin has widened and I can use that money for something else in the business. Maybe to save up for my next, maybe I want to upgrade my next rental space. I was paying this one 15k, but now I want to get a bigger space. It's going to cost me 30k. So if I reduce on some things, I can use that extra money, that 200 shillings I'm saving now on overheads. If I put it aside per month, that money can go to another 2 savings for the next rental place I get, or when I sell. Remember when we calculated how our depreciation, we expect to sell our oven for 30,000, for how much do you say? For 40,000 bob. But then we still need to find an extra money on top to purchase the new oven, maybe which will be going for 100k. So we've sold for 40k and we need now an extra 60k. So what you need to do is, if I've reduced my overheads, an example would be, if I've reduced my overheads, so that small amount I'm saving up, you can put it into purchasing my new oven, purchasing my stand mixer, or you can just set it aside in the bank so that whenever there's an emergency, for example, the way your stand mixer just dies on you faster than the stand mixer would, the hand mixer dies faster than a stand mixer. So if it abruptly breaks down, and maybe if it's fixable, fine. If it's not fixable, you need to buy a whole new item. That small amount of money that you've been saving up, you can finally use it as your emergency and buy a new mixer. So yes, once you calculate your overhead costs, you'll be able to see what is hurting or incurring losses into your business, and you'll be able to account for your business better. So now we'll add our overhead of 5 something, let's put it roughly at 600 shillings, and then we accounted our labor at 500, and our initial price for ingredients was 1096. So that comes to 2196 if you're using margarine, and if you're using butter, that would be approximately 2700 bob. So small costs eventually add up into something, and if we account properly for them, then we'll be able to properly account for our total cost, final cost of the cake. So in conclusion, accounting for overheads is important because we don't want to go at a loss, because at the end of the day, overheads add up to the total cost of the cake as much as they might be negligible. They are costs that we need from every sale that we make. It's a cost that we need to bring back into the business so as not to incur a loss. Not calculating for your overheads might drain your business, might bring your profits down. And also, if you do calculate your overheads, you get to see what you can reduce on, or how you can move things around to get lower overhead costs. So look at things like that, and then that lowers your overhead costs. So you try look at what is incurring more cost to your business so that you can reduce on that. And once you do that, you'll be now closer to finding your total or your final cost. So yeah, thank you so much for following. Hopefully you've learned something. Hopefully you've realized one small mistake that you've been making, one thing you've not been accounting for. And yeah, I'll see you in the next one. Bye. So for example, something small that I can say is kind of a variable cost is cling film, skewers, toothpicks, things that you end up using in your cake all the time, especially something like cling film. It doesn't necessarily mean when I go to the shop to buy cling film, I'm buying cling film for my cake, but that's a bill. The cling film is something every household has. But then if you're a baker, you know how much cling film you use in a day to wrap your after you finish making your buttercream, maybe to leave it overnight. If you don't put it in a container, or maybe you have small batches, you wrap them with cling film to store them, you wrap your fondant in cling film. So that's an expense that you probably don't even think about. So if you add all these expenses, these tiny expenses that we incur all the time, technically they're very negligible, but if you come to add them up at the end of the year, it's so much money that you never accounted for, that had you accounted for this money, if you had properly accounted for it, this money would have gone a much longer way. Hopefully this helps you, because it just hit me. It just hit me as I'm talking. There's things that I never even consider to account for, like cling film. Genuinely, my stapler, it just hit me now. Those are small costs that I don't even consider. They don't go directly into the cake, but something like my stapler goes directly into each cake I make because I staple my boxes. And yeah, so those are expenses that I incur every single time. They're very negligible.